Millions held Pi coins, but what were they actually worth? For years the answer was nothing. Pi lived in an enclosed mainnet. You could send coins to other users but not trade them for real money. It felt like monopoly money, fun, but useless outside the game. So, the community invented the Global Consensus Value, or GCV, a price they simply agreed on. Not based on markets or demand, just belief. They chose a wild number, $3,159 per Pi, inspired by the digits of Pi itself. Suddenly people imagined themselves as millionaires, calculating their wealth based on this fantasy price. The GCV became a rallying cry, a symbol of hope and unity. Forums and chats buzzed with excitement. If enough people believed, maybe it would come true. The GCV wasn't just a number, it was a movement. But it was all built on faith, not economics. The Pi core team never endorsed the GCV, but their silence let the myth grow. The community's belief in GCV became its identity. Yet, outside the bubble, reality was waiting, and belief alone doesn't pay the bills. The GCV became more than a price, it was a digital faith. Questioning it made you an outsider, defending it made you a true pioneer. Online, GCV believers chanted, "Consensus is the price." Some merchants even listed goods at GCV rates, creating a mini economy inside the app. The Pi core team stayed silent, never confirming or denying the GCV. That silence fueled the myth, letting hope and hype spiral. The community split believers versus skeptics. Skeptics pointed out that real value comes from utility and scarcity, not just belief. But for the faithful, consensus was everything. The GCV became a badge of identity, a dream too powerful to question. Yet the gap between dream and reality was growing, and soon the outside world would put the GCV to the test. The reckoning was coming. For years, Pi lived in its own walled garden. Inside, users traded Pi for goods and services, jam for coins, digital flowers for promises, but you couldn't take Pi outside. It was all theoretical value. This protected the network from wild price swings and let the community grow. Pioneers completed KYC checks, moved coins to wallets, and waited for the big day. The GCV thrived in this bubble, safe from real-world scrutiny. Meanwhile, the real crypto market was ruthless, prices set by supply, demand, and utility. The Pi core team set 3 conditions before opening the gates: tech readiness, community milestones, and stable market conditions. As more users completed KYC, anticipation soared. Everyone wondered, would Pi's value survive outside the garden? The day of reckoning was coming. Would Pi be a fortune, or just another digital weed? The open market would decide. The community held its breath. Reality was about to hit. February 2026, Open Mainnet launched, the garden gates opened. Pioneers could finally trade Pi on real exchanges for cash or crypto. Would the GCV dream come true? Not even close. Pi debuted at around $3 per coin, nowhere near 314,159s. For GCV believers, it was a crushing blow. The market didn't care about consensus, it cared about supply and demand. As more coins flooded exchanges, the price dropped further, down to 60 cents by April. Years of hope evaporated in days. The GCV was dead, killed by market reality. Many felt betrayed after years of daily taps and online advocacy. The dream of instant riches was gone, replaced by a harsh lesson in economics. The community was left reeling. Some cashed out, others clung to hope. The great unveiling wasn't a celebration, it was a wake-up call. The hype had met the real world, and the real world didn't blink. While the Pi community dreamed, crypto experts were skeptical. They saw the GCV as pure fantasy, economically impossible. With billions of Pi coins, a $314,159 price would make Pi worth more than all the world's assets combined. Experts argued real value comes from utility and technology, not wishful thinking. The referral-heavy structure drew comparisons to multi-level marketing. Analysts noted Pi's popularity in regions with lower financial literacy, making it ripe for hype. When Open Mainnet launched, top exchanges like Binance and Bybit refused to list Pi, citing legitimacy concerns. Even a poll showing 85% of users wanted a Binance listing didn't sway them. The refusal was a clear signal. the industry didn't buy the hype. Pi was a social phenomenon, not a financial revolution. The experts' warnings proved true. The GCV was exposed as a mirage, and the market moved on. Pi's story is a lesson in the power and limits of community belief. 60 million users built a vibrant, global movement, but after the price crash, hope fractured into frustration. Many felt cheated after years of daily mining and referrals. Referral bonuses vanished if friends didn't complete KYC, making efforts feel wasted. Some sold their Pi for whatever they could get. Others blamed the core team and exchanges. Thousands protested online, flooding Binance with one-star reviews. Yet, a core group still believes. They run nodes, hold their coins, and hope for future utility. The dream has shifted from instant riches to long-term growth. They argue Pi's value will come as real apps and uses emerge. For them, the journey isn't over, it's just harder now. The community's spirit endures, even as reality bites. Where there's hype and confusion, scammers follow. The Pi Network's GCV myth was a goldmine for fraudsters. Fake sites and social accounts promised to buy Pi at sky-high prices. Just send your coins or wallet keys. Many pioneers fell for it, losing their coins forever. As open mainnet neared, scams multiplied. Official Pi exchange. Sell Pi for $1,000, all fake. The core team warned users, never share wallet info, trust only official channels. Another twist, Pi IOUs, speculative bets on Pi's future price, created even more confusion. Prices for these IOUs soared, then crashed, misleading many into thinking Pi was worth hundreds. The core team had to clarify, these weren't real Pi coins. The lesson? If it sounds too good to be true, it is. Protect your info, ignore third-party offers, and stick to official sources. In crypto, caution is everything. Don't let dreams blind you to reality. So, what did we learn from Pi's wild ride? The GCV was pure hype, a fantasy, not financial reality. Real value comes from utility, not consensus alone. Pi built a massive community, but failed to manage expectations. Now the project must pivot. Less hype, more real-world use. The question isn't how much is Pi worth, but what can you do with Pi? For Pi to survive, it needs real apps, real demand, and real utility. The user base is a huge asset, if developers can build something people want. The road ahead is tough, with no guarantees. Pi stands at a crossroads, fade away, or build genuine value. For holders, the message is clear. Ignore hype, look for real progress. The dream was powerful, but only hard work will make it real. In crypto, reality always wins.